touch higher than we have perhaps anticipated. Not a drastic change in the story that we've seen building over the last few months. Inflation has been picking up since sort of the second half of 2025. But it's certainly unwelcome news, both for households and the RBA.
Yeah, I know the release has only been out for 2.5 minutes, but have you had a chance to glance at the areas of pain that are showing up in this release for households? What the big drivers of inflation are at the moment?
There are a number of major drivers that are weighing on households right now. I think one of the biggest ones over the last year has been electricity, as those electricity rebates that were given in the past have started to roll off. That has raised the level of inflation in the statistical measure, and is obviously a big area of pain for households. We've also seen oil prices creeping up this year. So I'm not sure if it's shown up in this month's data or if it'll be more present in next month's data, but that's likely to feed through to higher fuel prices at the pump.
Yeah, that's right. And as I look at this release, it says the largest contributors to the annual inflation were housing. We know rents have been a big one, food and non-alcoholic beverages, and recreation and culture. So, I mean, sort of consistent with the story that we were seeing at the end of last year. I mean, this for the RBA is coupled with a tight jobs market. So, I mean, it's certainly not easing pressure to raise rates, or at least there's no sort of rate cut in sight here, is there?
No, rate cuts well and truly off the table. The labour market is incredibly tight. The unemployment rate at 4.1% puts the economy above full employment, probably tighter than the RBA would expect in the medium run. And so that is putting further upward pressure on inflation, and will keep prices rising more quickly than the RBA would like to see. That's why the RBA increased rates in February, and we're expecting the RBA to hike rates once more this year. We think the next time that they'll make that call will be in May. We know that the RBA prefers the quarterly measure of inflation rather than the monthly data that came out today. And so they'll be waiting to confirm basically the strength in prices that we're seeing in today's data in the March quarterly inflation data.
Yeah, so we get that inflation data in April, just ahead of that May meeting. Is that why you think that they'll wait?
Yeah, that's exactly right. Well, the RBA does really appreciate that the ABS has started putting out monthly inflation data. The series is just a little bit too new for the RBA to rely too heavily on those data yet. And so while this is a signal that the economy is still running really hot, and that inflation is heading upwards, and that further monetary tightening may be needed, they'll want to confirm that signal in the quarterly March inflation data.
I mean, this is two-pronged for households, isn't it? They're experiencing high prices at the supermarket, when they're putting petrol in their car, when they're paying their electricity bill, and at the same time facing an interest rate rise potentially. How do you explain it in the context that actually the economy is doing pretty well? That's why we're in this position. Is it the capacity constraint story that everyone keeps throwing around?
Yeah, that's right. The economy is running hot. The labour market is really tight. The economy is producing about as much as it can produce, and that's part of what's putting upwards pressure on prices. For households, this is really a tale of two households. For people who own their home outright, we're seeing confidence remain pretty high at the moment. Inflation is weighing on it a little bit, but not too bad. But for renters and mortgage holders, they're really being hit with that double whammy at the moment: higher interest rates and high inflation. makes times really tough and is weighing on household confidence.